All right. Hello, everybody. I'm excited to be here with everyone today. What we're going to discuss is the perception gap between C-suite leaders and finance teams. We'll start by sharing the results of a survey that we here at Yooz conducted earlier this year, and then we'll explore how to bridge the gap and discuss some actionable steps you can take to align your teams. Before we begin, let me give you some background on the survey. We conducted it with access to a level of alignment between C-suite leaders and finance professionals across the US. And we actually surveyed 300 C-suite leaders as well as 300 finance professionals to assess their perception of the alignment between their teams. Now, the results were very surprising. There was a significant gap between the perception of C-suite leaders and the finance professionals. Now, while C-suite leaders generally felt that their teams were well aligned, the finance professionals reported feeling much less aligned. And we'll delve deeper into these findings and discuss the implications for organizations in the coming slides. So first off, I'm Jared Moss. I'm one of the regional head of sales here at Yooz. Been here about 3 years, and I talk to companies across the U.S. and Canada about how we can help them automate and make their alignment much more effective and easier in the AP process. So our agenda, we're going to talk about those key findings, how we can bridge the gap, and then steps that you can take. So let's talk about strategic alignment. Now, this ensures everyone in the organization is working towards the same goals and objectives. When teams are aligned, they can collaborate more effectively, make better decisions, and achieve greater success. Misalignment can lead to a variety of issues, including miscommunication here. Now, when teams are not aligned, it can lead to misunderstandings and misinterpretations of information, which result in wasted time, resources, and effort. For example, the finance team might be working on a goal of reducing cost, while the sales team is focused on increasing revenue. This can lead to conflicting priorities and inefficiencies. Now, misalignment can also result in fragmented data. Different teams may be using different metrics or data sources, making it difficult to get a clear picture of the organization's performance. For example, the finance team might be using a different accounting system than the operations team, making it difficult to compare cost and revenues. And then when teams are not aligned, it'd be difficult to maintain the transparency and accountability. This can lead to a breakdown in trust and collaboration. For example, if the finance team is not sharing information with the sales team about the company's financial performance, the sales team may be unable to make informed decisions about their sales strategies. And then misalignment can also lead to inefficient processes. For example, if the finance team is using a manual process to reconcile accounts, while the operations team is using an automated system, this can lead to delays and errors. And then when teams are not aligned, it can definitely lead to low morale among employees. And this can negatively impact productivity, creativity, and job satisfaction. If employees feel that their work is not contributing to the organization's overall goals, they may become disengaged and demotivated. Our survey also revealed a significant perception gap between C-suite leaders and finance teams regarding the amount of time finance professionals spend on strategic tasks. C-suite leaders generally expect finance teams to spend more than half of their time on their strategic activities. However, only 1/3 of finance professionals are actually meeting this expectation. This means that 2/3 of finance teams are spending more than half of their time on non-strategic projects. And I believe there's several reasons for this discrepancy. One of the main factors is the increasing complexity of the finance function. As businesses become more global and complex, finance teams are faced with a growing number of regulatory requirements and reporting obligations, and this can leave them with little time to focus on strategic initiatives. Another factor is the manual nature of many finance tasks. Manual data entry, reconciliation, and other time-consuming tasks can consume a significant amount of a finance professional's time. By automating these tasks, finance teams can free up their time to focus on more strategic activities. Finally, a lack of unit communication between C-suite leaders and finance teams can also contribute to this perception gap. If the C-suite leaders are not clear about their expectations, finance professionals may be working on tasks that are not necessarily aligned with their organization's strategic goals. I've personally experienced this firsthand in my career. At a prior company, the finance team was spending a significant amount of time on manual data entry and reconciliation tasks. And this was preventing them from focusing on more strategic initiatives, such as analyzing our company's financial performance and identifying areas for improvement. By automating these manual tasks, we were able to free up the finance team's time and allow them to focus on more strategic activities. This not only improved the efficiency of the finance function, but it also strengthened the relationship between the finance team and our C-suite leadership. Now, in the survey, we also revealed a significant majority of financial professionals that feel bogged down by manual tasks, which really prevents them from contributing strategically. In fact, 77% of finance professionals reported this sentiment. Meanwhile, 67% of C-suite leaders expect strategic input from their finance teams. And that's a striking contrast. Manual tasks can be a major drain on time and resources for finance teams. And some of the biggest culprits I've seen include manually entering data into spreadsheets and other systems. This can be time consuming and error prone. Speaking of error prone, human error. Even with careful attention, human error can still occur, leading to inaccuracies and delays. The best laid plans do not always happen without error. There are things like, collection issues, could be sales tax, even payment things that can happen and make mistakes to be made, which then causes multiple more effort. And then don't forget, when systems don't sync or integrate, finance teams may have to duplicate their efforts, which then lead to even more inefficiencies and increased cost. These manual tasks can consume a significant amount of a finance professional's time, leaving them with little time to focus on strategic initiatives. And it's really no wonder that so many finance professionals feel bogged down. Now, our survey also revealed an interesting disconnect between the perception of C-suite leaders and the finance professionals regarding the strategic impact of the finance teams. 64% of C-suite leaders feel that their finance teams are effective or very effective in the strategic decision making, while only 50% of the finance professionals believe that they have a meaningful strategic impact. Now, that's a significant gap. It also seems that C-suite leaders may have a more positive view of their finance team's contributions than the finance professionals themselves. I believe that communication and visibility may be contributing to that perception gap. If C-suite leaders are not effectively communicating their strategic goals and expectations to finance teams, it can lead to misunderstandings and a lack of alignment. Additionally, if finance teams are not given visibility into how their work contributes into the organization's overall strategy, they might feel that their contributions are valued. Now, this perception gap can also have a negative impact on both sides. For C-suite leaders, it can lead to a lack of trust and confidence in their teams. For finance professionals, it can lead to low morale, decreased job satisfaction, and a lack of motivation. To bridge this gap, it's really essential for C-suite leaders to communicate clearly with their finance teams about their strategic goals and expectations. Additionally, finance teams should be given visibility into how their work contributes to the organization's overall successes. By improving communication and visibility, organizations can foster a more collaborative and productive relationship between C-suite leaders and the finance teams. Now, our survey also revealed a significant majority of finance professionals are becoming increasingly frustrated due to a lack of understanding from leadership and a feeling that their day-to-day pressures are not being recognized. In fact, 3 out of 4 finance professionals report feeling this way. That's a very concerning statistic. And I believe that some of the biggest pressures that the finance professionals are facing include tight deadlines. Tight deadlines, the finance teams are often having to meet these for financial reporting, budgeting, forecasting, and this can be stressful and can lead to burnout. And then the financial landscape is constantly changing, and finance professionals must stay up to date with the latest regulations and compliance requirements, and this can be a daunting task. And poor data quality can make it difficult for finance teams to accurately analyze and report on their financial information, and this can lead to errors and delays. And then finance teams may be understaffed or lack the necessary tools and technology to be effective. This can make it difficult to meet deadlines and deliver high quality work. Now, these pressures can take a toll on finance professionals, leading to that frustration, that burnout, and that decreased sense of job satisfaction. And it's important for organizations to recognize these challenges and take steps to address them. The study also revealed a disconnect between the priorities of C-suite leaders and finance teams. While the C-suite leaders prioritize business planning and analysis, the finance teams are often prioritizing transactional processing. This is what I like to call the rose-colored glass syndrome. The C-suite thinks that all their strategic work should come first in the priority list, but bills have to be paid. Cash flow needs to be coming in, and everything that's going out of the business needs to be managed. AR, AP, cash flow, they're all priorities for the finance team, as they should be, but there's a finite amount of time during the day, and as it becomes painfully aware as we're going through this survey, the finance teams need help, and the modern automated solutions that help them with their day-to-day task. This misalignment is a common issue that I've observed in many organizations. C-suite leaders often have a high-level view of the finance function and may not fully understand the day-to-day challenges being faced by those finance teams. They may prioritize strategic initiatives without fully considering the operational requirements that are necessary to support them. On the other hand, finance teams may be so focused on completing their transactional task, they don't have enough time or resources to devote to strategic activities. And this can lead to a situation where finance teams are feeling overwhelmed and undervalued, while C-suite leaders are frustrated with their lack of strategic focus. To address this misalignment, it's important for C-suite leaders and finance teams to have open and honest conversations about their priorities and expectations. By working together, they can develop a shared understanding of the importance of both traditional task and strategic initiatives. Now, one area where there actually is alignment is the problem around manual data entry. Over 85% of both groups believe that manual tasks limit their ability to achieve strategic success. That's a significant thing. Manual data entry is time-consuming, it's error-prone, and it can hinder the effectiveness of finance teams. By automating these tasks, organizations can free up their finance teams to focus on more strategic initiatives. The fact that both the C-suite and finance teams recognize this is actually a positive sign. It indicates that there's a shared understanding for the need for automation and process improvement. However, the survey also highlights the importance of adequate technology. While both groups agree that manual tasks are a problem, they may have different views on specific technologies needed to address these issues. For example, C-suite leaders may focus on the ERP system, while finance teams may focus on automating tasks such as AP or AR. It's important for organizations to carefully assess their needs and invest in the right technology to support their finance teams and drive strategic success. Many of the issues we've discussed today can be traced back to manual processes. Those processes can be time-consuming and inefficient, and one of the most significant time-consuming tasks for finance teams that I have speak to is really chasing down approvers. Our survey found that the majority of respondents spend at least 4 hours a week chasing down approvals, and nearly a quarter spend 7 hours or more. Think about that. That's almost a full day of their entire week just chasing approvals. That's a significant amount of time that could be better spent on the strategic initiatives that your C-suite wants you to work on. Additionally, compliance issues and audit challenges can be a major drain on resources, and finance teams must spend time ensuring that they're in compliance with all relevant regulations and preparing for audits. Finally, a lack of real-time data can be a significant barrier to strategic decision-making. Without access to current and accurate data, it can be difficult for finance teams to identify trends, analyze performance, and even make informed recommendations. The constant demands of manual tasks, compliance requirements, and data analysis can leave finance professionals feeling overwhelmed and stressed. Now, when finance teams are struggling to keep up with the day-to-day task, it becomes difficult for them to focus on those strategic initiatives. And this really leads to a vicious cycle where finance teams are so busy with those tasks, they don't have time to improve their processes and become more efficient. To break out of that cycle, we need organizations to invest in the technology and their processes that can help automate these tasks and improve efficiency. And this will free up finance teams to focus on the activities and contribute more meaningfully to the organization's success. All right. So the other piece I'll talk about here is that our survey revealed that both C-suite leaders and finance teams agree on a solution. It's really AP automation. A significant majority of both groups believe that automation can unlock the strategic potential of finance teams. It's clear that both sides recognize the benefits of AP automation. However, despite the consensus, there is still a gap between awareness and adoption. I believe there are several reasons for this. Some organizations may be unaware of the specific benefits of AP automation and how it can help them achieve their strategic goals. Others may be concerned about the cost and effort involved in implementing a new technology. Additionally, some organizations may have preconceived notions about what AP automation is and how it works, believing that it's too complex or too expensive to implement. It's important for organizations to educate themselves about the benefits of AP automation and then to consider the potential return on investment. By investing in automation, organizations can improve their efficiency, reduce costs, and free up their finance teams to focus on more strategic activities. Now, for those who may not be familiar with how AP automation can enhance strategic impact, we'll discuss a few of those categories here. Now, AP automation can free up time for your staff by automating manual tasks such as data entry, invoice matching, and approval workflows. And that really streamlines your processes. Then automation can provide C-suite leaders and finance teams with greater visibility into the AP process, including the status of invoices, payments, and the exceptions, greatly improving your transparency. And then AP automation can also provide finance teams with real-time data and insights, enabling them to make more informed decisions and support their strategic initiatives. Let's explore how specific examples of how AP automation can deliver these benefits. So AP automation can play a crucial role in bridging the gap between C-suite leaders and finance teams. By enhancing the visibility, streamlining the process, and providing real-time data, AP automation can help to align priorities and improve communication. Now, with a centralized platform, AP automation can provide that for you, where you can easily see the number of invoices being processed, their status, and even who's responsible for approval. Now, that improved visibility is really important because that helps you align priorities, reduce misunderstandings between C-suite leaders and finance teams, and really give every member of your team access to where things are at. And then let's talk about a customized and streamlined workflow. Flexible workflows allow you to create AP tailored specific workflows for your needs and processes. And depending on the solution that you're looking for, that is something where I like to tell people, wave a magic wand. This is a great time with AP automation. You rethink your process. What should your workflow look like if you had a tool that had a workflow that could be custom designed to really what you need, not necessarily the limitations of what you're doing today? Those workflows can help you streamline your processes, they can reduce your errors, and they can then also improve communication. For example, you can set up automated approval workflows for low-value invoices, which then free up your finance team to focus on more complex transactions. Additionally, customized workflows can help to ensure that invoices are routed to the correct approvers, reducing the risk of delays and errors. Also, you can have an improved compliance and risk management because you'll have built-in controls. Your AP automation platforms often include built-in controls to help the finance teams comply with the regulations and mitigate risk. This AP automation can help the finance teams identify and address potential compliance issues. For example, the platform can flag invoices that are outside of the company's purchasing policy or have unusual payment terms. Additionally, the comprehensive audit trail can help finance teams to demonstrate compliance with regulation and more easily respond to audits. Now, from a real-time data and reporting standpoint, AP automation provides the finance teams with that real-time data and insights that they can use to make truly informed decisions. It will then also give them an improved visibility into their cash flow so that finance teams can monitor it, identify potential bottlenecks, and even negotiate better terms with their vendors. Real-time data can empower those teams to make those decisions and then truly support strategic initiatives. For example, we have finance teams today that they use the data to analyze their spending patterns, identify cost saving opportunities, they're negotiating better terms with vendors, and really making their cash flow much, much stronger. And then from a communication standpoint, AP automation can facilitate better communication between your C-suite leaders and the finance teams. This will help reduce misunderstandings because you're going to have a centralized platform for communication and collaboration. And then AP automation will then reduce those, which then improves your efficiency. So that AP automation tool can help break down the silos, it improves the communication, and then you're really moving forward toward the same goal. So how do you get started with AP automation? One of the first things you really need to look at is analyzing your current processes today, because you need to know what you're actually doing. But again, when you're looking at AP automation, it's not about what are you doing today. It's maybe what should you be doing, or where would you like to go? And that's maybe one thing you really need to be focusing on as you begin your journey. Identify where your bottlenecks are. So as you talk to a company, whether it's Yooz or somebody else, it will help you identify and know what you're looking to solve. So as you create your decision criteria, the things that you have, you need a solution to fix these bottlenecks. Then as you start researching for a solution, reach out to companies like us. Start having those conversations, because I'm not saying that one solution is the one size fits all, for every single person. The goal is have an idea of what's out there so you can make an informed decision on what the best solution for your company is. You also need to get your stakeholders buy-in, because this isn't just about who's using the application on the finance side. You're going to have approvers, you may have CEOs, CFOs, CIOs. There's a multitude of people that will be engaged in a solution when these things get rolled out. So you want to make sure everybody's involved, engaged, and that you're having those conversations at a high level. And then finally, work with whoever you're going to be looking at choosing on an implementation plan. It should be step by step. Here's what we're looking at from a start process all the way to the end, with everything in between, from a user creation, workflow creation, syncing of data, testing, things like that. You need to have an idea of what that's going to look like. And so let's talk about the Yooz workflow. So Yooz, we can help you from start to finish. So you can create purchase orders and purchase requests in our system, or you can do them in your application, sync them over to us. Our main bread and butter of this is the capture engine. So we use a smart data extraction engine to pull data. It's AI-based extraction off of an invoice to help capture it and push it down as different workflows. You even have the ability to do no-touch workflows in the Yooz application, which really streamlines the workflow and only has you focusing on the exceptions, not the everyday invoices that come in. So your AP team can work in review stage. Your approvers can easily and quickly approve or reject using our tool, not only from a cloud-based option, but a mobile-based option as well. And then if you're needing help with payment options as well, the Yooz team can assist with that. Not only allow you to make payments via virtual card, ACH, or paper check, but you would have the ability to have your vendors get an idea of, hey, where are my things at? And then, of course, we work with over 250 financial systems that really allows you to understand, hey, no matter what your ERP is, Yooz can assist with that. All right, so what I'm going to do now is I'm going to drop right into the Yooz demo. All right, so I'm going to log in here. It's going to be the error. There we go. So real fast, I just want to show you all what the application looks like. We've got about 3 or 4 minutes left. I always like to end a few minutes early so people have time to ask any questions, or if they're needing to get back to the next meeting, I don't want you running late. So the Yooz application, it's very intuitive to use. I like to call this our to-do section because that's what it's called. But in reality, it's what do I need to accomplish? There should be no more confusion for your reviewers, for your approvers, as they sort through Outlook and email trying to figure out, what do I need to work on? This right here reduces that misconception of what do I need to work on. It's right here for you. As you can see, we have many ways we can set this up. So I have this set up by my entities. So if you have multiple entities, we can support that and you can have visibility into those. And then my document types, meaning I have non-PO based invoice, PO-based invoices. I even have vendor statements. So within the Yooz application, we can actually bring in vendor statements, help you reconcile those. Maybe you're spending hours, even days. I've had one customer tells me they spend a literal week, a month reviewing vendor statements. We can turn that into minutes, through our data extraction. So our capture engine, we can capture through email, which I think everybody does now. That's kind of a pay-to-play thing, but there's a multitude of ways. The best part about the Yooz capture engine is that it's not just PDFs. I have customers say they have Word documents, Excel documents, they take pictures, they have TIFFs, JPEGs, all of that. So there's a multitude of ways that you can get items into our application. And now the other piece I want to talk about is our statistics page, because this is a really important piece. This kind of gives you that high level of visibility and it's what's going on within your environment. So how many invoices are in progress? How many invoices have come in for the month or even prior months, so you can kind of see how the business is ebb and flowing, as well as the amounts for, because that really affects your cash flow. What does my payables look like on a month-to-month basis? All of this information is easy to read, easy to export, and even customize. If you don't want to look at it a month-by-month basis, you can change it over to quarter, week, year, every 6 months, whatever makes most sense for your organization. But then lastly, what I want to talk about is reporting. Reporting is really important within the Yooz application. And I mentioned smart data extraction. Why that's critical and important for our customers is because we're indexing every single word that actually comes on to an invoice. So I can search by keyword. So this really is helpful when you're looking at vendor consolidation, or am I getting the best price? Because then you can search by a keyword. It could be a product, it could be a SKU, whatever makes most sense in your organization. But then it'll actually tell you, hey, here's the invoices that you've received that has that information on it. Now, the next question that comes up, well, I don't want to have to go and find it within this document, even though I know it's right there. I can search, because Yooz, again, makes this easy for you. That's the purpose, right, of automation, making it easy for you. I can search right there. There's my word. So this allows our current customers to figure out where they're ordering something from, potentially consolidate between two different vendors into one, get a better price, and really capture and increase the amount of return that they're getting on their investment. So for everybody today, I greatly appreciate your time. I hope that you've taken something today. I hope you've learned something good. And if you have any questions, please let us know. Reach out to our great team here. We're happy to help, and I know DNA is also happy to help as well. So thank you so much.